What's up, guys? This is Wade with Trade ATS, and I want to welcome you to this week's Master Pattern Training Series. This is where we go over our picks for Forex pairs that we think are set to move this week. So you're not going to want to miss it. Make sure you watch it till the end. So I did this for the first time last week, and I told you guys, if you want me to keep doing videos like this, make sure you like, make sure you subscribe, make sure you leave a comment. And the comments were just overwhelmingly positive. I was blown away. Everyone seemed to get a lot of value out of last week's video, so I figured, you know what, I'm definitely going to keep trying to do this every week. I don't know if I'll get to do it every single week because I have a very busy schedule, but pretty much most every week, I'm going to try to get a video out like this for you guys. So really appreciate those comments. Remember, on this video, make sure to like and subscribe. Helps the YouTube algorithm, helps spread the word about what we do, and it really just shows that we should keep making content like this. We always base it on your guys' reactions. So thank you for supporting the channel. This week, what are we looking at? Well, let's start with Euro Aussie. So why is Euro Aussie on our radar this week? Well, to start with, right now, according to our research, our internal research, right now retail traders are 80% net long. So again, if you watched last week's video, that's a huge indicator for us. Everything that we do at ATS is always counterintuitive to what retail traders are typically trained to do. So if we know retail traders are 80% net long, that means that their team is pretty much overbought at the moment, and we know that 95% of retail traders are likely to lose money. So that makes our bias short if we are trying to essentially trade against that mindset. We know that if 80% have clicked the buy button, then to unwind those trades, whether even if they take profits or they're getting stopped out, it's going to cause them to sell, which is going to have an effect of driving this market down. That is where the smart money is going to drive it to collect those stop losses. And it's just where the predictable liquidity is going to come into this market. Remember from last week, I think I talked about it, the institutions are very concerned about finding liquidity to get in, liquidity to get out. They're not going to just put in a trade and hope it all works out when they get there. They need to plan ahead. So right now, based off of retail sentiment, the safe bet is to keep driving the market down because they are trying to buy. They're trying to buy this market, probably looking for a double bottom pattern somewhere in here. Looking to buy the support right here on the weekly chart and turn it up, but that's probably not going to work out for them. Now, it can work out. Anything could happen. Remember that. You still need to manage risk, but likely it's not going to work out for them. So we are going to take a bias to the downside, especially just because of the simple fact the weekly chart is headed down as well. So what does that mean? Well, I'm going to look over here at the 30-minute and let's kind of dissect what's going on here. One thing that I really like is that with the value lines, you could see that value has been stacking short. We call this pattern walking down the ladder. Anytime whether you're using our software or you're mapping this out, when you see predominant value points shaping up and then you start to see that price action is holding those value points as you go down and it's becoming reactive, that shows that you have good strength to the downside. You could see that even through all this noise right here, you had the swing high, swing low, another swing up, another swing down, even a big one up here where we had some stop taking on this previous liquidity. It all kept going down. And you can see that if you just look at the red boxes, you can see that they just keep stacking lower. That shows you even throughout all this noise that your center of gravity is headed down, that the market still has decreasing value. So that's definitely a clue that I'm looking at right now. Now, we are kind of coming into Asian session right now. It's Tuesday morning for them. So things typically are kind of flat right now. So you always got to be careful in this period no matter what, because this is typically kind of a setup point for the market in general, is the Asian sessions as far as Forex goes. So you do want to be careful. A number of things could happen. But what am I looking at right now? Well, let's look at the framework that we have to deal with right now in this range. If we look up, we have some minor framework right here. So that would be if the market goes, obviously we're looking to short it. So let's remember that. We're looking to only go short this market. But this is the first point I would look at to see if we get a reaction and then ultimately up in here. So right now, worst case scenario, I would say that you're pretty much, if you're trying to enter a short trade, again, I'm not giving you guys signals. I'm just telling you generally how this thing could end up playing out, like I did last week. Right now, we just grab liquidity right here. You can see that we're in a multi-leg expansion. We have 1, 2, 3 legs right here. Pretty much, I would be careful in this range right here, coming back up to this expansion level. You got about a 54 pip range from where we are now up to expansion that you need to keep in mind. I have no idea if it's going to go up there or not, but what you don't want to do is you don't want to go so heavy right here that you can't survive coming up to here, or maybe even up in this range. Even worst case scenario, up to liquidity up here, because we are still communicating with this multi-leg expansion. This is communicating with what happened with this one as well. So these boxes talk to each other and they make up a grouping of boxes. So you want to look at this as kind of a family of value points. So keep in mind, this could pull back up to here. Now, based on the fact that the retail public's 80% net long, again, the only real incentive to drive prices back up there is just to get them even more long from the institutional perspective. But again, that could happen. The institutional perspective could even change, and the market can go long. Remember, it's not guaranteed 100% that this market's going to go short. It's just highly likely based on the sentiment. So keep that in mind. There is a number of things, but based off the framework, based off the technicals, I would be prepared to be creative on your entry in this general range. If things start getting much above this value point right here, then I would look to maybe close out trades and reevaluate and see if you can actually get a better trade placement. Because pretty much until the retail sentiment goes back down to around like the 50 to 70% range, it's all pretty much accumulation tactics, in my opinion. It's still, like I said, it's unlikely they're going to drive the market this high all the way back up to here. But if they do, you want to just kind of be careful and then look to see if there's any major turns happening back to the short side. Because as long as that bias stays short, especially as long as these weekly candles hold yellow, that's another thing, very simple thing you could look at. As long as that happens, no matter what, it's pretty much all coming back short. We're going to attack the active low right here, the most predominant low, and then probably get a good pop past that. So that's pretty much the battle plan for this one right here. Can you start building a position from where we're at right now? Absolutely, you can. But that's all going to be based on your money management, what you're comfortable with. Just know that between the framework here that we're working with here and pretty much up in this range right here, that's where I would like price to hold in order to keep momentum going down. If it gets much above that, you're going to want to be careful and you're going to maybe think about making some different decisions and protecting yourself to see what happens. So that's pretty much for Euro Aussie. Let's go to the next one. Our next pick comes from last week. We rolled it right through to this week, is Euro Franc. So last week, according to our research, retail traders were 90% net long. This week, retail traders are 83% net long, according to our research from the ATS War Room. So it's come down a little bit, but that's still rather high. So that would suggest that the safe money, the safe forecast of liquidity coming into the market is still on the short side. If we jump over to the weekly chart, you could see that there's no denying the momentum that we have here. Retail traders are thinking this has got to turn at some point. And again, it very well may turn if the institutions change their viewpoint fundamentally or they don't want to keep pushing it, they can just let it turn. That is a possibility. But for the normal just buying and selling algorithm that's normally working these markets, the safe liquidity is going to be to the short side. And that's what we're banking on. So as of right now, what does it look like on the lower time frames? On the 30-minute chart, you could see that since last week we came out of this choppy. This one was kind of hard getting started last week. This was the hardest one out of the calls from last week, but sure enough, the directional bias to the downside because of the retail sentiment and just the overall time frame momentum kept all these pulling to the short side. As long as you stayed short last week, you did really good on this pair, even though it was the hardest one to trade. So it's what we're hoping is pretty much going to be just a continuation of that. Right now, relative framework to work with. We had this push up through today, through Sunday into Monday trading. The levels I'd be looking at for this is going to be this expansion level, the fact we respected it back here, we respected it right here. That shows that this is definitely a relevant piece of framework to base your risk management, your entries off of. So I'd be looking at that level. So we very well may get another whip up to that level, maybe up in this neighborhood. But that's kind of the first tipping point that I would look at, whether you're making good progress in this trade or not to the short side. Remember, you always want to come into every trade situation with a plan. You want to define based on the framework, based off of value, and the price patterns according to the master pattern. You want to find a point on the chart where the initial idea starts to fall apart. When you can define that point, you've defined your risk level. And right now, based off of how this is all shaping up, I really wouldn't want to see price go too much above this, and ultimately really above this high right here, because that's really the last reaction that we've had to this framework right here. So in general, I would kind of like to see price just start working its way back down. Now, it doesn't mean that if it gets up through here that you can, let's say you do take a loss, you decide to get out of the market, as long as the retail public remains net long, it's ultimately most likely going to keep going short. And one way or another, we're going to visit this level down here. But it's really just comes down to risk management, because if we get up through this level, what you don't want to do is go heavy on your position and then ride it up to this level or potentially up here. You want to try to let it gap between these levels as best you can, so that when you re-enter, you're making all that back. Anything that you lost right here, plus as much as you can ride if it goes against you up here. You want to use it for a better entry is what I'm trying to say. So That's really what I would look for right here, just immediately as far as risk management. Now, upside potential right now, let's say your general risk is if you entered, again, not telling you what to do, but if you entered right here, let's say generally you got a 15, 16 pip move to the threshold right here, and your minimum trade upside would be down to here. It's about 34 pips. So immediately right now, you have almost basically a 2-to-1 risk to reward ratio if you entered right this very second, which is pretty good. But again, remember, there is a decent chance that just coming out of the Asian session into London, that you could get a whip up to here and be stopped out on that. So you're going to want to, it's going to take some art. If the price does come up here, it's going to take a little bit of the art of trade management to survive through here, and try to figure out if it's going to come up and keep moving against you if that does play out. So keep that in mind. You just need to be careful with that. But as of right now, remember the probability is that this market pushes down according to that, going against that retail sentiment, and you just want to position yourself for that, in my opinion. So if it does work out, we get down through here, what you'd want to look for throughout the progression of this week is price action to hold below this expansion line, and then for you to get a pop through liquidity down here, and then you're off to the races. Once we get through this expansion line, in my opinion, you're really not going to want to come back through that. So I would look to get through the expansion line, hold price action below that threshold level, and then look to protect your profits, at least a break even wherever you end up getting into the trade, at least protect it at a break even, and then try to make progress down below this level the best you can. And you should be sitting in a pretty good, strong position in this downward momentum moving market. And my last one I'm going to cover is none other than the CAD yen. This is also a carryover from last week. Just briefly touching on what happened last week, it was kind of eerie how good it worked out according to what I said might happen. We just came down, we looked at it right in this range. It came down, took out these liquidity lines right here, and then we had a nice, easy move up. So if you bought on this liquidity, sold to this liquidity, that was a great trade cycle to work with. You bought with the smart money, you sold with the smart money, very repeatable, and good job if you did that. I know I looked at some of the comments, and I think there was a few in the YouTube comments even that you guys got in on that, and made a good profit. So congratulations. Hopefully we could duplicate some of that this week on some of these recommendations. So, but don't expect it to be as perfect as what I called out. Last week was exceptionally, worked out exceptionally well. This week we may get a few more curveballs, but we'll have to see. We'll just kind of take it as it comes. So coming into this week, you can see by the end of last week, you would have had, if you rode this, you can see we just kind of consolidated sideways. We had a lot of value points build up in the same area. So hopefully you didn't hold it, overstay your welcome on that one and book some profits from here to there. But towards the end of the week, it did start to collapse down. But what hasn't changed, well, let's revisit it. Last week, the retail public was 86% net short, according to our research. This week, it's actually went up 1%. The retail public is now 87% net short still on CAD yen. So it shows that they're still trying to call the top. And remember, again, it can turn, but the safe money, the safe bet from the institutional perspective, based off that sample of the retail public sentiment, is still to drive this market to the upside. So what does that mean? Well, even though we've had these good moves to the downside, this could be nothing but a setup for this week to drive it long. So if we are looking to take a long bias on this market, one thing that I look at, and I'm not big on trend lines, believe me, but I can see sometimes when there's a predominant placement for a trend line that I know retail public's going to look at. That's the only reason I really use like moving averages or trend lines, is to figure out what everyone else is doing, because I always want to find a counterintuitive approach to the market. It's what ATS is all about. But I could just see right here, if we take a trend line and just basically kind of stick it down right here, you guys could see this is holding. And you'll notice that a lot of times when the market moves in the direction of the retail sentiment, that it usually moves very easy. And that can signal kind of a setup that they're just trying to kind of sucker more people into that direction, because this was very easy movement to get into right here. But what you could see right now is that we've driven up through that trend line. That's where we're sitting right now. So I'm not going to suggest that you use the backside of this trend line for risk management, but it is something to take into consideration. Just if you want to get a little more creative, you can. But right now, that's making anybody that went short on this market, they put a trend line from here to there, and now they're like, uh-oh, okay, what's going on? So something just kind of a besides the point. If you want to look at that, there it is. Interesting, nothing more than that. But based off the framework, we have two minor framework boxes according to the software. If you guys want to map value points on your own screen based on these levels, feel free to do that. But this is pretty much what we're dealing with right here. And what I'm ultimately looking for is to continue in the momentum of the week. Right now, from where we're at, you have an upside to the current most predominant value, the highest value point in this range of about 126 pips. The high, the liquidity on the high point right here, about 150 pips. So definitely a good, just kind of like basic upside. Now, if we get up through these levels and hold, then obviously, we can go on another big run on the weekly chart. But I'm looking basically to get from generally where we're at to in this neighborhood, up in this neighborhood. And that is a great distance all by itself. Now, that's good, but what if it doesn't work out? That's the more important question. If it doesn't work out, you need to be prepared to ride this thing all the way down here. This is kind of the box that I see that we're working within, from this minor value point up to here, which is about 100 pip box that we're dealing with. So keep that in mind, that that's really kind of your worst case scenario, and kind of point of no return is going to be down here. So the way I would suggest treating this, again, not telling you what to do, but the way I would suggest treating this is that if we get much out of this general range of this kind of family of framework right here, if we get much out of that, then I may look to get out of the market and see what happens down in this range, and then look to see if we don't come all the way back down in here, and then see if you could find an entry point down here at a better price. Also, we're checking retail sentiment on the day. I know I can't update you every day. That's more for our subscribers and people that use our support chat. If they ask us, we're more than happy to keep them updated on these types of things. But, that's why I look for the things that are really just far swung in one direction, like the 80-90% range, because it's likely that that's going to maintain through this week. So that's why that goes into the picks that we're going to talk about here. So chances are, if we do come down here, that we're still ultimately going to end up at this point up here, unless there's some huge fundamental change, huge fundamental rotation, even on the institutional sentiment. So good chance we're going to head back up to here, and that's what we'll be working. So anyway, try to work it from this range. Be prepared. Worst case scenario, it comes down into the range of this box down here, but hopefully we stay up here. We keep making immediate progress, and it's off to the races up above this expansion level right here, that value point, and it's another great trade. So that's it. That's what I have for you this week. Wish you guys all good trading for the rest of the week, and look forward to seeing you on our next video.